All right, good morning, everybody. FOMC day. Markets really started to tighten up yesterday and consolidate into a tight range, which is oftentimes what we talk about when we say we expect to go sideways into FOMC. That's the sort of behavior. It was uh, it was only in the afternoon, but there are times throughout history where we're going to do that sort of maneuver on Monday, Tuesday into Wednesday for an event like FOMC. It's what I usually call hurry up and wait. And when you can spot those in advance, when you can see enough of the information the week before or early into the Monday, you can get some really good trades on it through options more than futures, but through both, really. Just it depends on how wide of a range we're going to use. Yesterday's was a really tight range in that afternoon session. There's been a couple of really good articles on what we're expecting out of the Fed. Definitely not a cut. That would spook everybody more than it would help anything at this point. There is some talk about the balance sheet and whether they're going to make any big changes there, and forward guidance on uh, what they may do after April 2nd when a lot of this tariff data is about to see the light. The Fed really can't run projections on tariff impacts until they get all of the tariff info. And so that's the line in the sand. It's always possible that the Fed can do an emergency meeting as well. We're nowhere near that point. We don't need it, but it's just something else to keep in mind. There's at this point an agreement that there's no Trump put, and there's less agreement, but I don't think there's a Fed put either at this point. So looking at what we have going on this morning, Japan flat, UK down a quarter, Euro stocks up a quarter, S&P and small caps at a quarter, NASDAQ just a bit above a quarter. Going nowhere, holding fast, waiting on data. Not a surprise. We got data out of Japan on their rate decision. They held the line. It is Wednesday, and like we get on usual Wednesdays, we have the crude report at 10:30. Most of the time, that is not very impactful, especially on a day like this when everybody's going to be looking later in the day towards FOMC, and they're just very likely not going to be too interested in the crude report. That doesn't mean you should ignore it, though. I've seen in the past times where this report really moves things, and it's worth just keeping your eye on the clock and realizing that inflation and energy go hand in hand. So a crude report has the capacity to move this market. We're still in backwardation, by the way, when it comes to the VIX. We got a really big voodoo line here, 56.85. It's the snow line, kind of a big deal. We're basically at that line right now. We struggled to get through it once we were below it, and When we finally did get through it, we didn't keep it, fell back down. Now we're struggling to get through that white line again. When it comes to those voodoo lines, since their development is proprietary and the creators don't want to share how they made it, makes it a little hard to trust or to put any money on those. But I still keep them on the chart because we see price respond at those levels a lot. To me, they're as good as looking at a weather forecast. You know, sunny, not sunny, or looking at the clock, dark, daylight. I might not make a trading decision based on it, but I like to know where we're at, above or below, moving towards them or moving away from them. And right now we're on it. On the daily, we still got that failed flag argument. Now, the flag hasn't failed at this point. It's just set up as a failed flag. So if you think about the way a typical flag should progress, this white line is a Linreg line, but we would consider that the pull on a flag with a pull. And then we got to build the flag itself. A failed flag would break this 786 and begin moving to the upside, which is not what a bear flag should do, which is why we say it's a failed flag. But it hasn't failed yet. If it continues as a flag, then it will reject the 786 and it'll come back down and break 100, and then we'll begin to expand lower into the 111 and the 1236 below that. The 3-week and the 10-day are overhead at 57.23. So that's 2 levels of resistance right there that we would have to fight through if we can get a shot at an upside breakout. It would still be inside of yesterday's range, so that wouldn't even be an inside day breakout. That would just be up in yesterday's Globex resistance area. Ignore that market maker move. When we swap contracts and it's a triple witching OPEX, we'll get that whether they're hedging extra or not. So we just have to discount it this whole week. 57.25 is the ADR half. Really close to the other number that we were just talking about with the 10 and the 20, or the 10 and the 3-week. So even if we can get an RTH breakout, yesterday's regular trading hours, if we measure just the RTH of yesterday, and we're looking at yesterday's 111, which is a trade strategy that I like to play. It's called the 111, but we can land on the 1236. If we measure all of yesterday, the 1236 is the ADR half. It's also the 10-day. It's also the 3-week. We can just keep putting the word "and" on there. It's the 10-day, and it's the 3-week, and it's the 1236 of yesterday, and it's the ADR half. Get the idea. Stack them up. 57.25. Can we get through it? I mean, price can do whatever it wants. It's proven that. I think that's going to be a difficult level to get through unless the market gets some serious juice. We're not expecting serious juice out of the Fed today. It's very likely that they're going to say, we don't have enough tariff information. We got to wait until after April, and we don't want to cut because we don't see any reason to cut, and we've got a lot of reasons to hold tight. Well, the market isn't going to get a big juice push off of that. It's a whole lot of, we got nothing and you need to wait. Today's floor pivot is lower than yesterday's. That's bearish. Price opened underneath it. That's also bearish. We've already hit the pivot, so at least we don't have an MDP. We're still holding above the pivot on the week, which is a significantly narrow channel. And if this is telling us that we can get a breakout on the week with legs and really run, we would have to get all the way up here and break out of last week's high. So we'd have to get above basically 5,800. Or we'd have to get below Friday's or last week's low, which is just call it 55.50 for some easy numbers. We're nowhere near either one of those two edges. So yeah, it's a narrow channel, a narrow weekly channel. And that implies that a breakout could really grow legs and run. But we'd have to run just to get to the breakout point. When we get the FOMC data at 2 o'clock and then we get Powell at 2:30, it's possible that we can pick a single direction and run. We've seen that happen before in FOMC. It's not common. What's more common is the 2 o'clock release comes, the algos trade it, and then traders trade it, and then we get Powell, and he starts chipping teeth. He has prepared remarks. He reads those. The algos respond. Then he starts taking Q&A, and while he's doing that, the traders are already responding to the statements that he made. And then during Q&A, anything that the algos can pick up, it will. Behind that, the traders will. So many different events and different categories and sections of the FOMC that get traded in different ways. So it's rare to get a single direction push that sustains through the release and then the statements and then the Q&A, all driving us in a single direction. So while it's possible and it has happened, don't believe that that's the norm. I think Edgefill has some really great statistics on intraday trading on the FOMC day, if you want to go check those out. Looking at the floor pivot and the SNR levels, because we've gone sideways, these levels have gotten tighter and tighter. You can see that today's upper edge much lower than yesterday's, and the lower edge, it's a little higher. It's not a lot, but compared to Monday, it's a lot higher. So this range is more narrow, and that implies that we can get to an R2 or an S2 really quick, because we don't have to travel very far compared to these previous days where we would have had to travel a lot farther. So be careful with those systematic trading strategies that tell you to go long or short when we get to an S1 or an R1 and we target the other side. Because in this environment, we can get to those levels really easy. This week's point of control isn't perfectly lined up with last week's, but it is a part of the same footprint. It's a part of the same structure, this entire zone here. We're just building it out in that 20-point range. Now, on the one hand, that's not necessarily a bad thing. We've got our dip to the downside and reciprocation on the upside. We've matched that equally. Okay, so this is more like a zipper play at this point. We've got the center or the balance in the middle, and we've got our edges. And we can hold this range even with the edges. It's 200 points from 57.60 to 55.60. and the center point. We can hold in this for quite a while, more than I think any of us really want to. But we got to get out of this to really begin to do anything else. So if we do finally get that leg down below 55.60, then we'll be looking for 50.45 to 4,000 on the downside, and 59 to 6,000 on the upside. But we're not talking about coming out of this dip and, you know, going back to the old ways, back up at the highs, 61, 62. No. Overshooting the half, maybe getting into 6,000, and that would be just about as much as we could hope to see. It would just be a good, strong bounce to the upside. But if we take it the other direction, then 5,000 is generous. It's an easy target. 45 seems more likely. Not in a straight shot either, right? This isn't a doomsday scenario, and I'm not a perma bear. So as you can see, over the last 24 hours, we've removed a significant amount of volume off the top of this profile. But we've still got days to go before we narrow it down. And if we continue to stay within this 200-point range, this is going to become our new world. Point of control at 56.66. Someone pointed out the 666 the other day. I thought that was kind of funny. Like getting a Friday the 13th on a Thursday, huh? Gotta love it. At this point, it's the same concept. We've built out a lot of structure here, and we've overshot on each side in reciprocation. We've got to get out of this collective box to do anything else. We've already got the point of control down here with us. And as long as we're holding within this zone, that point of control won't be support or resistance. And now that we've gotten reciprocation on each side, what's more likely is we begin to build out a megaphone pattern. The way those work is that we've set a high and we've set a low. And so the next time we go up to that high, or the next time we go down to this low, we overshoot it and we go a little higher up. And then on the downside, we overshoot it and we go a little lower than the previous low. And we begin to build a megaphone pattern. There was an article doing some statistics looking at the S&P corrections since 1929. We have a 61% chance of rebounding from our current drop. I haven't gotten through the whole article yet, but a dead cat bounce or reclaiming 50% of the previous drop would not be coming out of the hole and, you know, making it back to previous highs. So what they consider a rebound or not, you know, we'll have to dig into it a little bit more. I'll share the link if anybody wants to read the article. It was on the Momo trading app. So we still got that VPOC from the 17th. So if we do continue to make a run to the upside, 57.50's got some resistance. Which isn't really too much of a surprise when we think about it. These numbers are off, by the way. It looks like, yeah, that's right. Just doesn't look right. The whole week I've been doing that, and that's usually what you have to do. If you have multiple charts that you jump through, you just got to keep checking the numbers. So 57.50 57.32, 57.11, 5700, and 56.92. All of those are levels that are overhead we've got to deal with if we do make a move to the upside. To the downside, 56.50 or yesterday's low, 56.32, 56.11, and then 5600. 56.92 in a VPOC down at March 13th, 55.89. The profile is a little wider than I would have expected, given the range that we were developing yesterday, but we're still in that range, just had a little overshoot. We haven't expanded on the downside, so we're not building a megaphone at this point. We use Linreg and just run it back. We're actually trending to the upside here. We can see the defense across the top, point of control, and the TPO point of control are both up here. So we've got a ceiling that we're working through. Not really all that helpful. It is worth noting that we didn't have a lot of structure down here. The TPO and the volume profile not really showing a lot of defense. So we didn't hit an iceberg along those lows. And Spot Gamma came out with their AM edition. So I will get it shared. At a quick glance, it looks like they talk about the vol structure and how the market doesn't really seem interested in FOMC today. I'd say that really tight range we were looking at yesterday begs to differ, but I haven't read the article yet, so just have to wait to dig into it a little more. There are weeks where you're going to get a really tight range because the indicator made by Mobius is not perfect, especially when it comes to contract changes and things like that. Most of the week we've been using the SPX on this weekly time frame just to have some guidance here on where we're at with this weekly range. If I put it back on the ES, it's just going to be that really tight, scrunched up, broken level. So either hand draw the lines or use the SPX this week. So for the week's range, not a surprise since we haven't gone anywhere. We're still just holding the line. We're nowhere near the edge. We're still 3.25% below the 10-week. Need to work our way back. We're not even into gravity yet. We'd have to get a lot closer to it to begin experiencing any of that gravity. And while we were hoping for a really sharp reversal that took us back to the edge really fast, we're not getting that. Just stair-stepping our way back slowly. Looking at the 10-day, we got back into gravity and then we left it again. So if we're looking at about 0.5% above and below the 10-day, we got right up into it. We've left it. We've fallen away from it. And now we're trying to work our way back towards it again. We've seen that sort of chop before, or just coming back and forth. But at this point, we haven't even gone to the other side. We've just gotten close to it, faded back away again. Kind of like back here and faded away. There's a lot of depth and background and statistics and reasons to believe that we can turn all this around and come out of it nice and easy, and that everything will be okay. The problem is that this is all connected to sentiment and unknown, right? The tariffs are unknown. The impact of just the threat of all these tariffs are unknown, and money's leaving the United States to go invest somewhere else. Until that changes, when investors aren't spooked anymore and we have answers to the unknown, there's no real way to see how we're going to come out of this and get back to where we were. So we can bounce and we can take halves and we can run through the half, but so far we haven't had anything come along that's positive that can change investors' feelings and give any trust to this market at this point. Forward outlook on earnings, shipping, supply chains, it just goes on and on. So without that, the more that they degrade that trust and push foreign money out, then this is our new reality. So, you can find long opportunities or you can find trades. There's plenty to trade, but it's a stock picker's market at this point. So you don't really want to run themes, like a strong dollar, a weak dollar, those kind of themes, or, shorting the airlines, shorting a retail. Just trade the names that you want to trade specifically based on their own behavior, not their peers or their sector or their industry, because that's what we're in. To be fair, just because we've lost all of that positive sentiment doesn't mean we have to crash and burn and go down into the crazy depths, right? We don't have to break down to 4,500 and 4,000 levels. We can spend 2 years chopping sideways without ever really breaking down below, say, 5,000 or 4,700. Nat gas is leading the way. You don't want to rally based on that trash. Behind that, we got Bitcoin, China, more China, more China. We got some Mag 7 up a little bit. It's more likely a bit of a mean reversion bounce. Tesla was up this morning. It got an upgrade from Fitzgerald. They upgraded it from neutral to overperform and gave it like some 400 and something price target. I haven't read the article, so I don't see why they got such a juice from that. Sounds like it's more of it was due for a bounce, and that's what we're seeing is a bounce. I wouldn't try to read too much into that Tesla move at this point. Airlines also getting a little bit of a bounce this morning. But they take a significant beat down, and now we've got this bear pennant. It's a lot like a bear flag, but it builds a triangle down here with and it's tightening up more and more. So the range is getting tighter. We're inside day, IX10, and it's getting more and more narrow. At some point, this is going to pop. Now, after this beat down, kind of expect that the pop would go to the upside just for a little relief before going down. I wouldn't be so confident on that, right? If we zoom out enough to where we can grab this August low, this is more like a half bounce, and we're just pausing and digesting that half. It wouldn't surprise me at all that we can break that mid or that half and continue to work down towards 16. So while we're due for a little bit of a bounce because we've had a steep fall, I don't think we're done trashing the airlines yet. So if I was looking for a way to join in this, I would have some plays against this gap close, call it $23. That'd be a nice place to short from. I'd like to short from the highs if we can bounce up even that much. China still looks good, but if we put it on the weekly, you can see that this is the top that we've been fighting with, right, for a while. Not really perfect, but it'll do. Just call it $40. And there's an old phrase, the wider the base, the higher in space. Well, I mean, we've got some highs from back here, right, that we can focus on. If we get above 40, we can go for 60. If we get above 60, you've got 80. And of course, there's the old phrase, if 80, then 100. That's a long ways off. We're nowhere near the point where we're looking at 100, but this is a weekly time frame too. So while it doesn't look like much, it's a lot of work. KWeb is just an ETF. You can open it up and pick individually a lot of different names that are in there. But China is getting all the attention, and a lot of these trading firms like Citi and others are downgrading US, putting us in neutral or underweight, while putting China in overweight and bullish categories. And money's flowing in that direction. They've got a new mag. Well, it's like our mag 7, but theirs is like a mag 10, right? So they got like this top 10 list for China that is very similar to our mag 7 group. Pot stocks don't want to rally on a pot stocks and nat gas. Uranium tied to data centers, which reminds me, there was the spot gamma squeeze list, and I was looking through the scanner on the squeeze list, and it had electric vehicle takeoff and landing, drones, Bitcoin miners, and quantum names on there. IonQ, Mara, oh, and EVs, because Rivian, Neo, those were on there. I shared the squeeze list in the chat. Should be able to spot it. That might make some pretty decent plays too. We don't have any expectation that today's going to be a rally day, that we're going to go anywhere before FOMC. It's very likely that we're just going to hold the line, go sideways, wait on data, and that just that's it. Having said that, we've seen it happen where we get some news early in the day and the market makes a move and it runs into lunch. And by run, I don't necessarily mean up. It can go down too. And then around lunch, we stall out and we go sideways again into 2 o'clock and the data and POW and the rest of it. So while we're expecting to hold the line and really not do anything, don't be surprised if we do get some move into noon, say, or 11:30-ish. Otherwise, we got nothing. Guys, watch the news, watch the clock, wait on POW. Be careful, be safe. I'll see you all tomorrow.